Don't forget to subscribe, like and comment. All of your engagement helps grow my YouTube channel. Hello everybody, this is Lara with your free daily analysis of Bitcoin, Ethereum and XRP. I'm going to look at a technical principle today with you. The principle is that the longer a price is within a consolidation box, the longer and stronger the resulting breakout will be. So let's have a look and see if that principle holds up for these markets. This is a chart of Bitcoin's entire price history from back in 2010. This first box here lasted 21 months with a high at $31.91 and a low at $1.99. The resulting breakout up to this high here in April 2013 saw price from the point at the breakout $31.91 to the high, a multiplier of 7 times. The following smaller consolidation lasts just 5 months with a high at 136 and a low at 65.42. The following breakout was 8 times, so a shorter consolidation and a slightly longer breakout. So far the principle doesn't hold here. And then we have a huge consolidation here of 41 months from when price entered to when price broke out, and that was followed by a multiplier for price of 15 times from the breakout point to the high, which was 19.870.62. So in this instance, yes, the principle does hold. And now we were followed by another huge consolidation lasting 36 months. And after the breakout, it only saw a multiplier of 2.5 times. So the principle doesn't always hold. And that's the issue with technical analysis, all analysis, including fundamental. This is an exercise in probability, not certainty. So it's a general principle. Currently, prices have been consolidating from back in March 2021 to the current day for 30 months. So following that technical principle, we would expect quite a long, strong breakout and a multiplier probably of 15 times or more from the point of the breakout, which will have to be 66,930.39. Quickly looking at the technicals on the weekly chart, Bitcoin's last completed weekly candlestick is not a hammer. The lower wick on this candlestick is not twice the length of the body of the candlestick, so it's not long enough for it to be a hammer, but it does have a bullish long lower wick, so this is still quite bullish. And look at strong support at 24,800, tested multiple times here and here. It was previously resistance here and here and tested here and here. So that support at 24,800 looks likely to hold. Moving over real quick to technicals on the daily, Bitcoin's having a pretty strong upward session, and so far it has pushed from volume compared to the 2 previous sessions. It's still the morning of the session for September 18th. We'll see how this one closes and see if volume can be stronger than these previous upward sessions. I've drawn a channel around this bearish movement for Bitcoin from its high on 13th of July to the potential long-term low now on 11th of September. Price is approaching this trend line. I will expect it may offer some resistance, and there is resistance here at 27,400. If price gets up to this trend line, it may initiate a pullback before a breakthrough of resistance, and then we will expect to see at least one back test of support, if not 2 or 3. Before price moves up and away. Don't expect price to move in a straight line. That's not how markets work. So look for consolidations or pullbacks at each of these identified resistance levels above. I still want to see a new high for Bitcoin above 28,145.56 in order to have confidence in the low for 11th of September being sustained, because that will break the series of lower highs and lower lows, the basic definition of a downward trend. Moving over to Ethereum, and let's have a look at how that technical principle upholds for Ethereum. First consolidation lasted 9 months. The resulting breakout was a 14-time multiplier of price. And then a longer consolidation lasting 11 months was followed by a 65 multiplier in terms of price from the high minus the breakout point. So far, the technical principle here holds, and now it breaks down. A huge consolidation lasting 37 months, followed only by a multiplier of 2.4 times. So the principle doesn't always hold. It's a general idea. Currently, Ethereum's been consolidating now for 23 months. It's a ways from its previous all-time high, 4865.94, a break above, A break above that point, a close above that point, and then a daily candlestick above it, I would consider a good break. And then we would expect to see a multiplier of possibly about 14 times, but we can use an average. We can say 2.5 times at least, and maybe up to 65 times looking at past behavior. So that's how I'd use that information going forward. The bigger picture for Ethereum, the Elliott wave count sees a cycle wave 1, 2 and now cycle 3 underway with only primary 1 and 2 complete. So this wave count for Ethereum is extremely bullish. It sees Ethereum in the very, very early stages of a third wave at primary degree within a third wave at cycle degree. And on the weekly chart, I have a target for you for a possible target for primary 3. If it were to reach 11.09 times the length of primary 1, it would reach up to 54,226. That's a Fibonacci ratio, a rather extreme one, but these cryptocurrencies, when they exhibit Fibonacci ratios, do tend to be rather extreme. For the short term, a little second wave correction here may not move beyond the start of the first wave below 1074.4. Someone asked me in comments on the last video about the proportion here between minute wave 2 and minor wave 2. Minor wave 2 lasted 14 weeks. Minute wave 2 here lasted 21 weeks if it's over at this last low. Yes, there's disproportion here, but that's okay. And one of the big reasons why it's okay is this may be an extending third wave. What I might need to do is move the degree of labeling, and I think I'm actually going to do that now. This may actually be a better degree of labeling for this early movement for Ethereum. With this degree of labeling, price would now be expected to be in a third wave at minor degree, within a third wave at intermediate degree, within a third wave at primary degree, within a third wave at cycle degree. So a third wave at 4 large degrees. When third waves extend, think of it like an accordion. When the accordion is compressed, the wave is not extended. When the wave extends, you stretch the accordion out, and now you can start to see the subdivisions or the folds within the accordion. With cycle wave 3 being extremely likely to extend, and primary 3 extremely likely to extend, and so on, intermediate 3, minor 3, all extremely likely to extend, when you stretch that accordion out, you're increasing the proportions of how long it takes the subdivisions within the extended wave to be. So it's okay when waves extend that their corrections within them may be longer lasting than corrections of a higher degree. The proportion shouldn't be too bad for the wave count to have a right look, but you have to accept that when waves extend in price, they also do so in terms of time, and extensions in terms of time means the corrections within the extension are going to take longer as well. That's how that works. So this is absolutely fine, and I think it means that this degree of labeling is more correct, because now we're looking at an extended third wave at intermediate degree, so the subdivisions within it are going to take longer. But it's good to see that prices move back above this trend line, which was providing some resistance back here, and it's now closed well into this little flag pattern extended out. It's also good to see some push from volume so far for today, for the session, although we're still in the morning, so there's quite a long time to go. Let's see how this one closes. I'd like to see an increase in volume beyond this session if possible. That would be quite a bullish signal from Ethereum. Let's have a look at how this technical principle upholds for XRP. The technical principle being the longer prices within a consolidation, the longer and stronger the resulting breakout may be. First consolidation lasted 24 months and was followed by a breakout that saw price multiply 26 times to the high from the breakout point. The next consolidation was quite short, lasting only 7 months, and that was followed only by a 7 times multiplier for price from the high to the breakout point. Currently, XRP has been consolidating now for a whopping 69 months. So, given that technical principle, we would expect a multiplier of possibly longer than 26 times, but at least 7. So I'll give it a range of 7 to 26, given past behaviour, erring on the side of expecting it to be longer rather than shorter. So far for XRP, this technical principle does hold, but that doesn't mean it has to hold in future. It's a balance of probability, not certainty. It works more often than it doesn't, but it doesn't always work. The Elliott wave count for XRP sees a cycle degree first wave over here, double zigzag for cycle 2 and cycle 3 in its early stages, with primary 1 and primary 2 complete, now looking for primary wave 3. On the daily chart for XRP, this is now the main Elliott wave count, because this channel that contains all of this downward movement is now properly breached by a few candlesticks, 2 of them being green upward movement. I will have further confidence in this wave count if we see a new high above 0.5467 and then further confidence above 0.6650. That would break the series of lower highs and lower lows. The alternate Elliott wave count sees a continuation of intermediate wave 2 as a double zigzag W, X, Y, but there's a problem here now within Y, A, B, C. C has to be a 5-wave motive structure. We may have 1 and 2 an incomplete expanded flat to be followed by 3, 4, 5. The proportion here of minuet wave 2, it just isn't looking right. It's just too long lasting compared to minuet degree waves within minor wave W. So that's reducing the probability of this wave count. But it's still useful, and this is one reason why it's always a good idea to have alternate wave counts to do Elliott wave properly. The reason why it's useful is if minuet 2 may not move beyond the start of 1 above 0.5467, and validation of this alternate, even with its problems, would add further confidence to the main wave count, because then we can eliminate a more immediately bearish scenario. XRP is breaking above this conservative channel I have drawn on my technical chart. Look out for next strong resistance at 55 cents. Price has already tested support for a couple of days at the upper edge of this channel and may now be moving up and away. So I think it might just move on up to 55 cents, where we may see another consolidation or pullback. XRP is also showing some push from volume today. Let's see how the session closes. I'd like to see volume stronger than the 15th of September. That would be very bullish. Doesn't have to, but if we did see that, that'd be a great bullish signal for XRP. Thanks everybody, and I hope everyone had an awesome weekend.